In this presentation, we will make an inventory payment, basically writing a check for inventory purchase. That check, however, being linked to a purchase order that we made in the past, the check being populated, in other words, from the information created with the purchase order within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We are once again going to be writing a check. Let's review what we are doing. We're going to select the plus item up top. We're going to look at the vendor tab. Remember last time, the full cycle for the vendor when we purchase inventory typically means that we will then have the purchase order. This would only be the case if we're able to order the inventory before we make the payment. Otherwise, we'd have to make the payment at the point in time of ordering. So if we're a large enough company, we can then purchase order, meaning send a purchase order, not making a payment, not receiving the inventory, one form that has no transaction related to it, but an information form. We imagine ourselves doing that. We have done this for, in our case, Gibson guitar now. We said, hey, we need some guitars. We'd like you to ship us the guitars. Once we get them, we'll check them out, see if they're in accordance with our order, then we'll pay you. So that's what's happened here. Now we're going to get the guitar. We're going to get it with the bill and the check, and we're just going to go ahead and open up the guitar and say, there it is. There's the bill that was given with it that should tie out to our purchase order. We now are going to write the check related to that, writing the check for the inventory, recording the inventory, recording the related payment at this time. We can go down to the expenses tab on the left to see the same kind of picture, write the same kind of scenario, hear the same type of story. If we go to the expenses tab up top, we're looking at the purchase order here for Gibson now. So we made a purchase order. We said, hey, Gibson, guitar maker, would you give us a guitar? We would like this guitar. Once they give it to us, then we're going to pay them. So if we go to the vendor tab up top, we can also see the detail from Gibson. If there's a lot of activity, might be easier to do that. We have then our purchase order here. We're now going to write a check. We're going to populate it from the information from this purchase order. So we'll do that up top. Going to the plus item, we're going to go to the vendor section. We're going to write a check. So we're going to write a check. We're going to write a check to Gibson, who is the producer of this particular guitar, or the seller, or the wholesaler, or they're the one that gives us the guitar. We buy them from them. So we're going to say Gibson, type that in. There it is. And we'll say tab. And then on the right, once again, we have that purchase order. It's going to tie it out. If we wanted to open it, we could do so, but we can't. We don't want to do it here because it'll take us out of the check. So we're just going to add it. We're going to say add that, and it'll populate our check with the information from the purchase order, which is nice. We're going to keep the date at January 25th. It's going to be coming out of the checking account. That's going to be typical when we write checks. And then we're going to scroll down. The check number should populate automatically. We're not going to print it, but whether we print it out of the printer, out of QuickBooks or not, the check number should populate to whatever the check number is, which will be external. We'll have to get those from the bank. The checks will have to come from the banks in either way. It's not going to be in the account detail. It's going to be the item detail. Remember the difference between the two. If we're just charging an account like utilities or whatnot, and we're writing a check, then we'll put it up top. But the items down here are things that are a bit more complicated, meaning we have to track not only the inventory account that's going to be selected. We can't just put it up here to inventory. We could, but then it won't track the type of inventory which we would like, which is here, GSB, Gibson SG. So if we use the item detail and use those items, then QuickBooks can track the inventory for us, help us to record the inventory, help us to record the cost of inventory, help us to record the related sale of that inventory. So here is our guitar. Now we got one guitar. The rate is here. This is all coming from the purchase order. So the purchase order populated this. We also have a customer once again. Not always the case. We might have a purchase order. Many times, many companies might have purchase orders where they just purchase a bunch of stuff that they are going to have in their store, not a particular purchase. In our case, custom purchase for this particular customer. Music store stuff came in, said, hey, I would like this particular guitar. It's not in the color I want. Doesn't have the kind of whatever on the guitar that I would like. So we're going to say, all right, well, we'll buy a guitar specifically for you from Gibson, and then we'll get it for you. And we're going to say that this is going to be billable and taxable, and that'll help us to link to the music store stuff. It'll help us at least to give us a reminder that when we save an invoice for music store stuff, what was it that we have an invoice for, to help us give a link to that. May not be the most perfect system, but it'll give us an idea of the fact that when we populate music store stuff, we're trying to get a link to the purchase order and now to the check that we wrote for the particular piece of inventory that we purchased for that particular customer. We'll see that in future presentations. We have the standard kind of memo and attachment information. We could, of course, print this, or we could save it as a PDF file. Note that QuickBooks does think of this as a type of form, and it is just a check. So obviously when we think about it, it's just a check, right? But it's an input screen, so it's a driving form for QuickBooks. It's an input form that's going to drive a transaction. What is that transaction going to be? The check means the checking account's going to go down. That's what the check means. Cash is going to go down, checking account's going to go down. The other side then is going to be driven by either the account we select, which we didn't select an account because we selected an item or an item. And the item is inventory item, meaning inventory is going to go up. Journal entry then to accounts affected. Inventory is going up, cash is going down. The check means cash is going down. Other item we selected is an item, and that therefore it's an inventory item. Those are the two sides. We're going to save and close. Check that out. So we'll say save and close so we can check that out. And then we're going to go to the reports on the left side. So we'll go to the reports. We're looking at that balance sheet report, so we'll go to that balance sheet report to look at it. Scrolling up top, changing that date range from 01/01/19 to 12/31/19. That's January 1st to December 31st, 2019, and run that report. Scrolling down, we're going to have our checking account. That should change, so we're going to select that checking account. It went down by the Gibson now, so there's the Gibson, the check we wrote for $598. Selecting that, we'll see the check for $598 that we just input. We pulled that over from the purchase order. Looks great, looks nice. Let's close it back out and see the other side. Closing that back out, scrolling back up, back to the report summary up top. We're going to scroll down to the inventory. So now inventory should be going up, not by one guitar, but by the cost of that guitar. So we'll select that. And we see that we purchased this guitar from Gibson. Note that I don't see it here, and we'll see why. If I scroll back up, I'm going to say, what happened here? I don't see it on this side. And that's because if I go back into the account up top, the checking account, we see scrolling down that this one went into an account called inventory asset rather than inventory. So there's two inventory accounts, and that's kind of a problem. So QuickBooks, the company file came with two inventory accounts. So I'm going to go back to this now and take a look at this. There it is. It's in inventory assets. We don't really want to have two inventory asset accounts, however. So this is a good opportunity for us to troubleshoot a problem and see if we can make an adjustment for it. So first question, how did this happen? How did we get this amount here? Why didn't it go there? It's because it's being driven by the item, the inventory item. When we set up the inventory item, we took it to the inventory asset account rather than to inventory for whatever reason. So what we want to do then is go to that item. So if we go back to the items, then we're going to go to the sales, we're going to go to the product and services, and take a look at the type of item that we sold. Like we sold the GSB, the Gibson here, so it's the Gibson SG. So if we select that item, if we edit that item, we scroll down a bit, we see the inventory asset account is inventory asset, right? And we would rather have, there's two inventory accounts. If we select the drop down, we'd rather it be going to inventory because that's where everything else is going. The reason this is happening is because we set it up separately. We set it up at a separate time rather than when we did the bulk invoice inventory. So we're going to set it to inventory and then say save and close. So now we've made that adjustment. However, it may not adjust the financial statements that we have just put in place right now. So let's take a look back at our forms then by going to the reports, by going to the balance sheet, and then change our date range up top. We're going to say 01/01/19 to 12/31/19 and run that report. And then if we scroll down to the inventory, it does look like it made that change retroactively. So now we only have the one inventory account. If we select that inventory account, then we go down to Gibson. We see Gibson here. So there is Gibson. So we've made that change. There's the check that we just wrote. Now, if we want to not have that error happen again as we create new inventory items, we may want to delete or suspend or make inactive that second account. Let's do that now. So if we go to the accounting on the left side, and we're going to go up to the chart of accounts. So we're on the chart of accounts tab, and we want to look for that inventory. We're using this one. This one we're not using. So this is a duplicate account. Because there's no activity in this account, we should just be able to delete this account. To do that, we're going to go to the right to this drop-down arrow, and we're just going to say delete. Delete this account. And are you sure you want to delete this? We're going to say yes. And the account is now inactive, so it shouldn't be a default account now when we start to create a new inventory item. Now let's go back to the reports on the left, go back to the balance sheet and run that one more time here. We're going to go from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. So there's our inventory amount. Let's check that inventory now to the detailed report. Right-clicking, we're going to duplicate this tab. I'm going to say this is going to be the balance sheet, so I'm going to pull the other tab to the right of it, and then run the inventory report to just double check it. So we'll go to the reports. We'll go to the inventory valuation. I'm going to search for it, inventory valuation detail or summary, inventory valuation summary. Changing the date up top to the end of the year, 12/31/19, just to make sure we got all the data. So here we have our information by the type of guitar. It totally sums up. The total sums up to. It totally sums up to 2009-42. Scrolling back to the other side, that's going to be the 2009-42. So that looks good. So it's all in one account. That's good, and it all ties out to our sub account. That's good. And then the one we purchased was this GSB, I believe. If we select that, we're going to see our check. There's our check to purchase that new item. For more accounting information and accounting courses, visit our website at accountinginstruction.info.